following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Apologize for being out Friday. Had some priorities here. Had a buddy out of Hong Kong that was here from another company and had to kind of strategize with him a little bit about some things we're doing moving forward. But it's good to be back, and the Greek news is paramount, taking over all the airwaves. We're going to kind of get right into that. Here's the euro. We're going to, it's really weird. I mean, like I think a Greek exit is, just the higher percentages that are now available of that possibly happening, make it to where that's bad for the euro. But, think about it. I mean, they're shedding some weight. A lot of liabilities for the euro in general. I mean, who knows? Markets may take it as a positive. Ultimately, I think in the near term, it's basically a fear situation. But you had pretty good reversal in the euro. Here's this. Here's that 112.25 area up top there that we talked about that we were shorting against. And again, you wake up, or you get up last night in your case. And you got 300 pips in your favor. So it's kind of nice how that worked out. But again, that doesn't happen all the time. I'm a big fan of this thing continuing to stay weak through this process this week. We're going to try to have Eric Courtney on just a little bit. He and I have been talking about, he doesn't sleep just as much as I don't sleep. And we've been talking about this since last week. And, what's the ramifications of a Greek exit, and how's that affecting global markets? The cool thing is as we looked at our scanner quite a few times, here's our weekly, here's our daily, this kind of global heaviness, relative to that profile net negative type connotation really has just been there for a while. And the Shanghai, the wheels coming off of that thing, that has, in my opinion, zero things to do with the Greek exit, and that's a little bit of a moniker. I'm going to go to the Shanghai really quick, and we're going to try to get Eric on as soon as we can to start this discussion. But, we started having the breakdowns first around 4,500, and then last week we kind of rested on the close around that 42.06. Today we opened up, and this is long-term technical damage, folks. We haven't had a weekly close below. Okay, so we're going to get Eric on after the first break. I was just told that, so that's fine. That's great. We haven't had a weekly close below these 4,200 levels on the Shanghai, but this is where you can't be in longs anymore. And it's not really worth it to start picking battles down here if you were not in the Shanghai and we're waiting for a pullback. We tried around the 42.06. We talked about that last week. One of the things, I get it. One of the things that we always try to do is try to, have situations where we can buy the dip around major inflection points. Didn't work out. That's what stops are for. We actually gapped up this morning quite a bit. I'm going to go to our daily on the Shanghai. We'll see how that works. So we kind of closed on the weekly on for lows around 42.06. We gapped up to 4,300 and then just continued to sell off all day. I'm in Asia, and I kind of watched this stuff, and it was interesting to watch another just ridiculous percentage volatility day. I mean, this is unbelievable volatility. So 4,300 to 38.50. What do you got there? 450 points on a 400. So you almost had 10% volatility in the index today, shaking some people out, and that's the way that works. But in my opinion, it has nothing to do with the Greek situation. And And a lot of these global indices are starting to get some volatility back into them, which is nice from a trading standpoint. I was talking to Eric, and we'll probably talk a little bit more about this. It's just really, really interesting how over the past couple of years, the banks have kind of shed some of their proprietary trading groups from a compliance standpoint. I mean, Jamie Dimon seems to still, from a compliance standpoint, find a way to break the rules and pay the fine and come out net positive for the bank, and that's just, criminal in itself. But anyway, a lot of the traders out there, the trader groups have become less and less in the U.S. I mean, I'm talking about number of traders, number of guys sitting around day trading, trying to make a living off trading the markets. It's decreased. A lot of registered investment advisors have popped up. They're kind of the new breed traders, if you will. So it's interesting that all that shedding of proprietary trading and individual traders has kind of happened now. Just like in 2008 when we had, massive volcanic meltdown, every short fund had closed their doors right before that happened. So like it was can't take the pain. The last big short fund had hit the exit sign right before the massive sell-off. So I'm going to kind of liken that to, what's going on in the trading world. We may start seeing some really good volatility. And then who's around to take advantage of it? I mean, obviously there's some computer trading going on these days, but we may have a surge in people getting back into the market trading again. It freaks a lot of people out when there's volatility, but that's an investor group, and that's a group that I'm not actually that familiar with. So we could bring some people back out of the woodwork, which would be great. And if you're a trader and you're an existing trader, I don't think you can complain about what's going on right now. I mean, we're going to, again, get some thoughts from Eric on this, but, as a day trader, you got to love these days. And, in Chicago, when I was there, I think the VIX had gone, when I was physically there, we had come down into, no, it wasn't. This was 2000. This was way after I was there. I think this was 2007. I think the VIX had reached, I want to say 5. Maybe. It's either 2007 or 2009. I think it was 2007. We reached a VIX of around 5, and it was virtually impossible. Every prop trading group in the nation was getting, just chopped to pieces during that environment. You need volatility as a trader to kind of flex your muscles and trade a little lighter, actually. I mean, and, trade a little lighter, relax the stops a little bit. When there's a low VIX environment, you seem to want to try to leverage more because there's not as much movement. And then when there are these little moves that happen the wrong way, you get hurt really bad. So in a high vol market or high vol environment, you want to give it time to breathe, trade a little lighter. You've got a really good bang for your buck in those types of scenarios. And these are the ones when the really, guys who have been waiting patiently for this type of environment to happen, they are pressing the gas pedal when they see blood and when they see movements in the right direction. Remember, we always talk about in our prop trade environment, the really good traders find a way to add to winning positions instead of adding to losing positions. And you play that game enough, adding to losing positions, at some point you're going to experience a very, very bad day. Because some of those things don't ever snap back ever. But when you kind of, for instance, on the S&Ps, I've got the S&Ps up right now. So we were below 60, and we've got a breadth situation. I'm going to pull this up, and we're still talking about kind of fundamental trading techniques, if you will. As we've got this up, I'm going to go to our daily. I mean, I'm looking at our S&Ps. We talked about the weekly breadth negative numbers, and I'm going to pull that up just for a second here. We cross breadth negative. And by the way, something really cool down here, we're going to have straightened out tomorrow. We've got a price chart, actually, that's long-term weekly. It's hard to kind of see here. Okay, yeah. So again, we've got a price of the index down now down here on the bottom of our breadth charts, you can kind of see some correlations. But I'm going to go to our weekly. It's kind of hard to see on the long term right here. But, we crossed breadth negative here and a while back on June 4th. And what I'm going to say is that we were kind of generally passing on longs after that had happened and trying to find resistance areas and breakdowns. So this morning, breadth negative, stemming from Friday. We gapped down below our 2060 area weekly unfair lows. These are these weekly unfair lows here. We've crossed the border to the 2060. We've got above the 2066 area. And the reason I'm bringing this up is now we're kind of getting back into, the balanced area, the fair auction, as I like to call it. And if you're a short-term day trader, I'm personally trying to pass on some of the longs. When we get a gap down that significant, you're going to have some people taking profits. It can get carried away from itself. And when you pass the 2060 and then the 2066, that DMZ, all bets are off on the short side for a while, all right? But the longs can, that talking about that trader that adds to winning positions can find some things, smell some blood, feel some guys who are shorting around that DMZ, and may be able to take advantage in a larger way. We still are on the 240-minute scene. We still haven't seen a new profile appear, and we're just going to focus on the S&Ps for a second. No new profile, still very short-minded on the long term, in my opinion. If we can get back down below 66 here, I think we could start seeing some much lower numbers than 2060, even though we have gapped down. But right now, there's nothing to lean on. No new 240-minute box. There's nothing to lean on in the weeklies and dailies. So you have to just wait patiently and hope that we have some new information that you can possibly legitimately short against, which will be a new 240-minute profile here. Or again, waiting until we gravitate past that 6660 DMZ from the daily to the weekly. If you guys don't watch the show much and you're just tuning in for the first time, these DMZs, as I like to call them, are two time frames that are giving you a little bit of a demilitarized zone, if you will. Here's the situation on the S&Ps. I'm going to go into our futures grid on our scanner, and hopefully this will be available today. I mean, I saw the tech guys coordinate more with this for TFNN users. I think they've got everything worked out, but I'm going to shut up because I've said that quite often. It will happen when it happens. This is a good lesson for me not to announce something ahead of time. Here's the S&P minis. Here's those numbers, 2060. There's 2066. Guys, we're going to be right back, and I think we're going to have Eric Courtney with us, and we're going to talk about Greece a little bit.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, welcome back to the show. I think we've got Eric on with us. Are you there, Eric?
I believe I am here.
That's good to hear you. Nice
to hear you.
Nice to finally get you on.
Crisscrosses here. I'm reading about the Irishman, the Portuguese, and the Greek that went into a bar, and I wanted to know who paid the bill. I said, "Yeah, the German paid the bill."
That's nice. Hey, you and I were speaking. Not. Scott, we've been talking about this for a while, but more recently about some of the things going on with Greece, and I know you and I've been kind of mulling over the Latin America scene, which seemingly is going to possibly heat up again. But the Greek thing has a lot of ramifications and things that we don't really know. Nobody's ever exited the euro, for one thing, so there's no kind of process for this, if that even happens. What do you think is going to happen? Do you think they're going to exit or not? I guess that's the first question.
I don't think they want to. I think they would like to I think they're scared. They're going through a week of hell right now with the bank situation. They're numb, but the bottom line is, I just heard Ilarion talking, and he said there's an 85% probability that they will have to leave. They just, and a lot of people are blaming the creditors to Greece for the problems. But yet when you look down underneath what the loans look like and the extensions and it's low interest rates, Greece is broke. They don't have the money. They have put all the money behind the pensions. They're going to have to go through, I don't know, it's going to be hell. And it's a slow train wreck that we're all watching. And it doesn't seem to be any sort of solution on the boards right now. But I think in the back rooms, which is where I believe a lot of this should have taken place rather than in the press. But in these days with the internet, you can't avoid it. Everybody knows what's going on. The net of it is there's going to have to be a transition period of them leaving. It's not going to be, well, you're out, goodbye, good luck, and let the island just Greece and all the people. There's too much money involved here. There's got to be some sort of a transition, but I don't think they're going to be part. I think it's going to be a crack in the dam that we're not going to have a finger to hold very easily, because I think it's going to open up the door to a lot of other problems with countries that are borderline. Italy, example, and a number. Ireland came through this because they knew how to take some pain. Greeks don't know how to take the pain because they really don't. They feel they're the founders of civilization, mathematics, philosophy. They have this sort of. I remember the movie, the Greek Wedding movie, where every word anybody said, the guy said, well, that's a word, the derivative is from Greece. Then here's the they have a different lifestyle over there. Zorba, dancing on the beach. All he could do was dance. He was in such pain. They've lived a long time. They have a tremendous culture, and we're humiliating them, and they're being humiliated, and it's not a good thing. So, there's a lot of social dynamics that are going on here now, and I expect them to basically not be able to pay the bill and default. And what's going to happen in the transition is going to be what's going to be interesting, and that's where your scanner will tell us what to look for, opportunities, and what to stay the hell away from right now. And I think that's really a critical thing that most people will not have this morning, waking up trying to figure it out.
Yeah, there's still a huge sense of entitlement over there. I hear what you're saying, and there's a lot of that going around globally right now, if you know what I mean, with our administration. Man, just it's we've got just a ton more things in the deck than Greece does, as far as possibilities, work ethic, you name it. But 60% of their GDP goes to pension plans, and
I can't believe that number, John. I mean, that number is mind blowing.
That's a real number. That's a real number. The average in Europe is 13%. And I was talking about this, I think, a week or two ago. The retirement age is like 10 years younger than like the Lithuanias of the world who are in the euro also. And it's like, how do you even? I don't know how you can't talk somebody out of that. I mean, that's just not right, for one thing.
There's going to be an evaluation coming here of everything, and it's including us. I'll wait.
Yep. Hang around if you can.
All right, pal.
And we'll be right back, folks.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eric, are you still with us?
I believe I'm still with you, John.
Great. Thanks for being with me. I'll tell you what. I
love being with you on days like this because this is you have some great. I mean, because I've asked you some questions before. Where do you hide? Where do you look? If you're an investor, you do one thing. If you're a trader, you do another. And you had some great answers. And I love the answer that you came up with. In terms of that, always trying to use a scanner to take that part of the world you really want to ignore right now and be able to analyze it. And you had some good thoughts there. I thought we could share some of those.
Yeah, that's a good topic. We always try to eliminate one thing or another, and the scanner really does that for me. But I want to, we were kind of going through the global indices, like, where do you hide? What do you do in this type of scenario? We were talking about Europe in general. Here's this is the daily ranking of kind of a net profile positive or net profile negative outlook on some of these indices. There's 16 indices up here, and I've got them on an intermediate basis. Mexico just hanging on by a thread here. Thai sitting. Basically, virtually, these are just flip-flopped around. The ones that are green, everything else is negative. So, Eric and I were looking at, the FTSE 100, the DAX 30. I'm just going to drill into the FTSE 100 here, and this is after, pretty much the whole day trading here, pretty much. A lot of reds, sea of reds. There's some opportunities you can see. Stocks are still hanging in there. BT Group PLC. I mean, the scanner just kind of picks out those in a red, green, gray, peel back kind of mode. A couple of stocks here, even that are green, they're showing some new supply coming on board. WM Morrison Supermarkets PLC. But I guess fact of the matter is, it's the same turn the rinse the same way, looking at this on every drill down set of instruments in the world. And you try to find opportunities long and short in this type of environment. Eric and I were specifically talking about, if you're an investor and you're just still long, do you pay up for the insurance right now? I mean, do you go in, the VIX has climbed a little bit, obviously the volatility's high. I mean, I told him, from a trader's standpoint, you almost got to gravitate to some of these markets, and you're trying to more than likely stay net flat at the end of the day, because you don't want to just have the gaps to deal with in the wrong direction. But I'm looking around, just like I told you, Eric, it's like, is there a big fear factor in some of the normal fear instruments in the golds of the world? I mean, look at this thing. I mean, this is gold. I mean, it's a big deal. I mean, this is just supremely negative for gold, in my opinion. It's just, not the flavor of the day when it comes to the fear factor. And let's take a look at the September 10-year contract. I mean, we've been talking about not getting too happy about short and treasuries, but this thing really from Friday's close, let's just 125 even to where we're currently at 126. We're up a handle, period, from Friday's close. I mean, like, that's we got
it's a sold-off world. Here. Believe me, everybody's on Prozac, whatever. No question. Everyone is watching things in slow motion anymore, it seems to me, which is a good thing. But you've got. Yeah. Go ahead, keep going.
No, well, what I was going to say, like, as just a small footnote to what I had left, Eric, what you said is really, really important. The Zoloft Prozac world. It's like everybody's just gotten put to sleep, especially in the U.S. Like, we've got Teflon on our market, and everything's going to work out, and it's a rated G movie, and nothing's going to be scary, And people that are thinking that, and the unemployment rate's going to tick down another 0.1%, blah, 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 and the earnings are going to be okay. And in my opinion, if that thing starts showing some weakness, and of course Yellen's going to be there to save the day and say we're never going to raise rates, but if that starts showing some cracks in the armor, do you know how much this thing's going to come apart at the seams?
I know. It's going to happen. We have Asia in trouble, and people are moving money out. They have been. Now Euro is in trouble. They're moving money out. So we're looking good from a domestic American stock market point of view. Although we're toppy, we could be toppy for a long time. Europe is an example here now. To get down on the bottom line, there's too many personalities. If you want to beat a dog, you know what? You're going to find a stick, and you will find a stick, and they're finding sticks, and the dog is Greece. Like you mentioned, Teflon. Eurozone credit rating is like the frying pan. Greece is on the bottom. Okay. So I think a lot of people over there are saying, look, let them go. Let's make a transition plan, and they can float. Now, you'll have a country floating, and you've got a lot of other countries really dependent and intertwined. So what it does is it puts a big hole in the center of this globalization working thesis that we've been riding along for a long time. And it's very scary. I don't have the answer exactly where it's going to end up, but I do think we're seeing some major damage structurally to the concept of this new economic world of globalization and trade agreements. The United States, we have so many bonds. Yellen's going to go over to Draghi. I can imagine the conversation. She'll say, listen, you want to buy a few bonds? I got a couple. No, I was trying to sell you a few bonds. We got to unload a few things. I mean, it's not going to get any better soon. So you have to be patient. And I think the market has shown patience, because the only place to be has been stocks. I've said this for a long time. There's nowhere else to go right now. The inequality situation is through the roof. It's insane. But let's face it, the world has operated that way for centuries. When you had kingdoms and serfs, when you had various governments. I mean, it wasn't 50, 60 years ago, Russia knocked out 10 million people. anything can, nothing shocks anybody anymore. It's like the old cab drivers saying, traffic, what difference does it make? There's traffic, there's always traffic. So what, I mean, that's kind of what the market's like anymore. Now, what we have here, traders have come back to fore because picking stocks has become important again. Anyone who doesn't want to trade or is afraid to trade, or those people sitting on all their money, are foolish because they're not earning anything on the sidelines, believe me, unless they're loan sharks. So they better get back involved. You are able to show us this morning in a few comments you made, here's some areas to stay away from. Here's some areas to look at. You can drill down on some of these indices and some of the other ETFs and some of the other stocks and look for a couple of ideas out here that might all of a sudden get hammered enough to go in and bottom fish. Not that bottom fishing has ever been a great idea. I'd rather pay them up on through the top and let them go further. But it's, the index investing idea is over, okay? The indexes are not doing as well as people can do in their own investment and using their brains. So let's give them some stuff that they can use their brains with right now. You've got some other good ideas this morning that you came up with of areas to stay away from, areas to look at. Go on and take a look, and what would you see if you just walked into the room and all of a sudden somebody has $1 million, John? Do something quick with it. What would you do?
Well, to be honest with you, on a day like today, with the S&Ps doing what they're doing, I know I don't want to be too contrary to what you said because I actually believe everything you just said. But on a day like today, it may actually, just because of the volatility and the way I feel like our information allows, to be leveraged against, I'd actually be looking to put some part of my risk for the day into trading the index itself and to trading the S&P 500 futures because we've crossed some borders here from where we opened up, namely sitting above 2066, and then I'd be looking for stocks that really never gap down. All right. I mean, we could rally today, we could sell off again, but if you think that the gap down has happened and we may close the gap, and this is just just kind of an initial psychiatric reaction or whatever you want to call it to the Greek thing. If you find stocks that are holding up, that are showing their hand early as they don't really care, if the market does sell off, then those are the types of stocks that hopefully strengthen a weak market that won't actually be that painful if they do slide with the market. And what I did right then is I kind of pulled up our scanner, pulled up some stocks, some of the ones that are kind of sitting on inflection points, AIG, AMG, Amazon. A lot of these haven't opened, so we don't get a true reaction yet. We need to wait probably about 15, 20 more minutes before some of these start to register.
There'll be a fade. Yeah, there's going to be a big fade this morning, right?
Yeah, so these are, I'm going to kind of wait a little bit and let the scanner kind of identify what's showing some strength. And conversely, I may want to see, what has really not lifted off the bottom and is still staying below profiles right within the scanner. And the beauty of it is it gives you the inflection points to orient stops around. On a day like today, though, I'd keep my eyes on the treasuries. I'd still kind of take a peek at gold. I'd kind of keep your eye on the euro. Those are we look at those on a day-to-day basis, as you know, Eric, but those are the ones when they start getting a little hairy, they will, individual stocks. And again, you coined the phrase, this is probably a stock picker's market. Steve Rhodes has been a big fan of that. I'm a big Steve Rhodes fan. And, I think that time is here. But on a day like today, I think you look at the generalities of what are the normal usual suspects that we look at, just see how they're acting. I mean, the euro's acting remarkably well. Gold is acting remarkably non-volatile.
Take a peek at the yen. Look at the yen. You've been so good on the long yen, short euro, and people now can trade around the profits they have and be a little bit aggressive for those who have been listening to you, and watching. Yen has become like an important currency again now because euro, everybody's saying, oh my God, the euro is going to fall apart. It's not going to fall apart, but go ahead. The yen
Yeah,
is.
I mean, the yen today is kind of having a little bit of a sneeze here. We kind of got back down below 123.29. That was where you kind of had to look at stops there. But I mean, that doesn't mean that we can't get back in there and turn the rents the same way. We always talk about that. I mean, again, the beauty of trading is I think you can limit taking losses is a part of trading, and if you have to take the stops, I mean. You can lose 3 times, lose $1 3 times, and win 1 time and make $6. And guess what? You're a very smart guy for doing that. I mean, and you've had a 75% losing streak there. So just like with the yen, right now it's just kind of a wait and see. You got some larger inflection points down below at 121.44, and I love how this profile appeared below price action on the long term, but right now in the intermediate, I think you could sit tight and either wait for 121.44 or just get back above 123.29. Right now we're kind of in no man's land, and you really don't have any help from the shorter term 240s either. So that's the answer on the yen right now. I'm still a big fan of this thing getting devalued.
Right.
Here's the situation on the dollar. I'm going to pull this chart up, Eric, because we got about 2 minutes, 1.5 minutes before we go to this last break. Very similar reaction actually as the notes. I mean, we showed the notes a while ago. We showed that 125. What was it? 23, 24 line that it's kind of pulled back to from actually spiking up to 127 and some change. Similar reaction as the dollars. Like, the fear factors are not there. Again, that's going to all come unraveled again based on what's coming out of the Greek talks. But it's not. It's these things aren't going crazy, and by that same token, if you look at some of the things that are going on in the S&Ps, I mean, the S&Ps are kind of drifting around 20 points lower now than where they ended on Friday. It's
Nobody knows. I mean, the other thing is, this is the biggest vacation week, by the way, besides the Thanksgiving week in the year. Most people take the whole week off. So you've got a lot of people are just sitting on, it's interesting. What you said before, though, when you were talking about the yen and devalued, you're really not keen on jumping into China here to try to pick a spot, are you? China is probably off your map right now, right?
Yeah, we got about 20 seconds for this last break. So China, you and I were talking about that earlier. This is a wait and see now because we kind of got below some really long-term technical levels, and we're going to have to wait now. When the Shanghai goes from 2,000 to 5,000, if you're a long-term investor, you got to give yourself some room. You've given yourself enough room right now. Now it's time to sit tight, and it's not time to buy the dip anymore right now either. So, Eric, good point. Thanks for coming on, and I'm sure we'll pick it back up later today.
Latin America, and people are talking about it. Keep that up.
You called it, man. We'll talk to you soon, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and thank you, Eric, for coming on. It's just I always learn so much when I talk to that man. He's just been there, done that. Started at Merrill Lynch, or a precursor to Merrill Lynch, back in the early '60s, and man, just been in New York on Wall Street forever, and not just take his words at face value. S&Ps. Let's take a look at this one more time. Again, we crossed the borders 62, 66. I don't know if it's day to just go bonkers long and this thing gets back above 2,100. I don't know if that's going to be the case. I think you're going to have, well, not that I've got a crystal ball here. You're going to have some volatility. I think you want to wait till a new 240 appears, 240 being 240 profile. And what's going to happen here is, and this is a fact, what's going to happen is you could go in here. We just added 15 or 20 new Forex pairs to this thing. Really, really cool. Did a bunch of optimization this weekend. Lightning quick. Here's our grid for the S&Ps. And what's going to happen, as you can see, that 2097 still bottom of the box on the 240s. You're going to see a yellow peel back, just like you see here on heating oil, just like you see here on live cattle, the Nikkei. You're going to see that on the S&Ps, and that's going to signify and indicate that we're probably going to have a new profile appear on the 240s, and you're probably not going to see that on the dailies and weeklies. So that's going to be the new favorite time frame that I like to see new information appearing on. And obviously the 60, you might be able to glean some information off of that. Just to give you some numbers that are available. 2084, the 60-minute unfair lows. If that's hit without a new profile appearing, that's going to be pretty serious. And that 2084 area is going to be something to pick a battle off of. There's just nothing to get excited about in this no man's land here. It's, again, 66, 60, 66, 60 on the bottom, 83, 97 on the top. That's where we're at. That's all we have. All right. On the euro, here's the numbers to be aware of. I know you guys are probably looking to trade this. The 240s, interestingly enough, we got a new profile appearing just a while ago. 110.85 down below, and up top, again, you got 112.20.25. Those are the big numbers. 110.86, 110.85.86, and 112.20.25 up top. Those are the things to pay attention to, and areas to pick battles. I don't think you got to take a big stance on one of these products, especially today. These are areas to wait until the market comes to you. If you're doing some day trading, those are some powerful numbers, in my opinion. The U.S. dollar, we've come right back down into support, and that support is at, and I'm going to pull this right off the scanner. Where's our dollar? See that? See, it says top, and it's flashing green. That means that we've reached the top of the box. Top of that box is 95.75, and we have come down into it. So, again, is this an area to go long? Possibly, yes. We need to see some kind of fear come back in. If this thing starts caving in, gold starts selling back off into the 1170 area, obviously I think the euro will be climbing at that point. These things are to some degree all interconnected, and right now, I'm seeing relative to what's going on, hardly any fear, and that could be bullish for stocks, by the way. There's last picture on gold. Right in the middle of the balance there, you guys. Thanks very much. Larry Pinsavento's next, and the deck is stacked at TFNN. Great posts. Stay tuned. We'll see you again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.